It's the midweek edition of Business Morning. 55 minutes of current and relevant business conversation. Sorry, it's not the midweek, it's Thursday. Good morning, everyone. Welcome to Business Morning. I'm Ini John Mekwa, and we start business as usual from the global oil space. Prices we see continue to climb today, and we see it at incredibly high level, especially for Brent. Brent is heading to $100 a barrel. It's $97.79 a barrel. 3.95% increase is what we've seen less than 24 hours. Because when we had this conversation this time yesterday it wasn't up to $97. WTI is $89.52 a barrel. That has also gained more than 3%. But when you look at the gap right there, you see that it's more than what it normally would be. Normally you see about $2-3 difference between Brent and WTI. But at this point, we see that the difference is a whole lot more because WTI is still under $90, $89.52 a barrel, and $97, that's a whole lot. But it does suggest that perhaps the United States, which is a major holder of WTI, perhaps there's an intervention coming from the US, and that's why it seems that the WTI is a bit calmer than it would have been. But of course, we know that the cause of all of this is the lack of agreement and peace between the United States and Iran, and the Strait of Hormuz is still a major contention with both powers, trying to outdo the other. And whatever they do there, of course, comes down to the other parts of the world. Back here in Nigeria, we've seen the impact of these. And we've seen Dangote, a major domestic refiner, he started coastal loading, but of course with increased price. And mostly because he says, like yesterday did release a statement to say that the government under the crude for Naira only gave less than 25% of the supply of the obligation that they were supposed to. So he's had to get most of his crude feed from outside, and so because of that he's affected by this price, and that means that he has to translate that to, in fact, there was suspension of the coastal loading as well as the gantry loading. The coastal loading was just resumed yesterday. So but anyway, let's find out all of this with Mr. Jeremiah Olatide. He is the Chief Executive Officer of petroleumprice.ng. Mr. Olatide, good morning. Welcome to the program.
Thank you so much for having me this morning once again.
Yeah, your website has been really busy updating us with the changes. We saw the coastal loading resumed. Has the gantry loading, has it resumed?
Yes. As of yesterday, there was a communication sent out from the refinery to its customer that the gantry loading has resumed immediately with a gantry price of 1,250 naira per liter. And I think this is a very good one for the downstream sector after a suspension of sales for coastal loading and gantry loading for the past 7 days. Traders and Nigerians have lived in tension, hoping that if this gantry loading and sales wasn't suspended, prices might touch to a 1,500 in coming days. But thank God, the refinery has resumed sales and loading at the gantry with a 1,250 naira per liter loading. I think this is a good news for Nigerians. And we know internationally prices are rising. We don't need to have a local supply glitch also adding to the crisis at the international front. So thank God currently there's a stability in our supply of petroleum products. Looking at the fact that Dangote refinery supplies about 90% of what we consume currently. So for Dangote refinery to have suspended sales for 7 days, it has posed a huge risk to the downstream sector in Nigeria.
So we are thanking God at least there's supply. I think we should just accept the cost, because we've seen now Brent is more than $97. I have seen that there's a new price even this morning on my way to the office. Can we now expect, even because this is an increase from what we had yesterday, and we know that Dangote is mostly getting his feedstock outside the country. So should Nigerians be bracing up for another increase, seeing that with the resumption of both the gantry and the coastal loading, there has been an increase in the price?
Yeah, once again, thank God for Dangote refinery. He set the pace for supply and prices in Nigeria. So for Dangote to have kept his gantry price to 1,215 against the 1,275, 1,300 by the private depot, I think that's a good one. That is like a 60 naira below what was sold in the last 1 week. So with the 1,215, prices for retail price in Lagos should not exceed 1,250. In Abuja, it shouldn't exceed 1,270, and in Far North, it should be around 1,300. So with that, I think there is structure for pricing now that the Premier Refinery has resumed loading and sales, and he has set the pace for how every stakeholders, from the depot operators to the retail outlets, will fix their price. So hopefully, I just hope that the refinery would not respond to the surge in Brent crude, because Brent crude is surging faster, and if Dangote refinery is a bit reluctant to respond to the surge, I think Nigeria will benefit and buy possibly between 1,250 at the pump to 1,300. For me, since there is no glitch in supply at the depot level down to the retail level, I think prices will still remain where it is.
But this morning I did see a filling station above 1,300 actually. Can we assume that that's perhaps is mostly imported crude or petrol?
Okay, now let me just tell you what happened. Before Dangote resumed gantry sale yesterday, the private depot sold as high as 1,275 to 1,300. And some retailers, some station owners must have bought from those products. And that is why they are pricing at that rate. For now, that the price structure from Dangote is out and it is pegged at 1,215, I can tell you for free that in coming days, prices will align. From the depot, they would need to compete with Dangote by reducing their price from 1,275 to 1,230 or 1,220 to compete with Dangote. And by extension, the retailers would peg it to 1,250 to 1,350 to 1,300. For me, the strategy that Dangote adopts in collaborating with MRS really worked effectively. So I'm calling on Dangote refinery to revisit that strategy, and that when you fix a gantry price, you should be able to come up with your retail price to all your MRS stations. So with that, competing stations around over 2,000 MRS stations in Nigeria would need to compete with the MRS and drop their price. So one of the reasons why we keep seeing varying prices is the movement from that strategy, that collaboration strategy between Dangote refinery and MRS station. So if that strategy is being reinforced and enhanced, and as soon as the gantry price is fixed, retail price for all MRS stations, which account to over 2,000 across Nigeria, is fixed, other independent stations would take their prices in line with the MRI station, and there will be a systemic price control.
So the free logistics that Dangote promised, do you know if that has started?
Yes. As I speak with you, the refinery is currently receiving sales from all marketers for a 250,000 liters. That's just about 5 trucks. So if you are a retailer and you have about 10 stations across Nigeria, that means you should be able to afford 5 trucks. It's simple. Their numbers are out there. Their contacts are out there. Reach out to them. You just pay a 1,215 naira and you get direct delivery to your stations if you are in Lagos, if you are in Abuja, if you are in Ogun State and other 3 states that is being approved. So for me, the Dangote strategy is working. He also needs to make sure that supply glitch does not occur. What has happened in the last 7 days has caused a 18.6 increase in price at the depot. That is a 200 naira increase from 1,075 naira to 1,275 naira in just a week, just because there is a suspension of sales and loading at the refinery. So the federal government should work with the Dangote refinery to make sure that supply is not tampered with, because there is a direct connection between supply and prices. As soon as there is a glitch in supply, it will cause a form of scarcity and traders will take advantage of it and prices will keep rising. So hopefully, I'm hoping that this would not happen again. The suspension we experienced in the last 7 days should not happen again. And if that doesn't come to bear, prices will be controlled, because the Dangote refinery is quietly a pan-African organization that wants Nigerians to get product at a very reasonable rate. That is why they were quick to reduce the gas price.
Mr. Olatude, you sound like you're working for Dangote now. If I didn't know better, I would have said that your company is now affiliated to Dangote. Well, thank you. We feel your passion and and thank you for your time.
Pleasure. Once again, it's a pleasure.
Yeah. Well, I guess when it comes to do with energy costs, it concerns everybody and affects our pockets, affects our work, affects our movements, and so everybody is connected. Away from the oil and gas sector now, see the market yesterday, and we saw profit taking did take over 0.51% down, 245,408.40, and then we lost the 159 trillion naira level yesterday. We went to 158.318 trillion naira. Look at the activity, and we saw just deals. Deals seem to be, missing out in some of those green colors that we see. So it was the only one in the red yesterday. Top gainers, we had Unilever, Trans Nationwide Express, and Cadbury. Top losers, Boa Foods. Boa Foods lost 10%, and of course that really impacted the closing numbers at the end of it, even though 8 billion is what investors took out, but Boa Foods had a lot of that, as well as Nestle. Nestle too lost 10%. Mikio is also part of the losers for Wednesday. And then top trades, First Whole Core, yes, celebrating First Whole Core, their 5 trillion market cap mark that they hit. The increase of Mr. Tedola stake over 21% now. Those were very much in the news yesterday. And then put that as the top trade. Access also was heading to 27 naira, but we saw a bit of that being taken out yesterday, as well as GT Co. They made the top trades yesterday. Now, outside the market, the federal government is targeting the conversion of more than $50 billion in investment commitments into factories, businesses, and jobs as a shift focus from attracting investors to delivering real economic growth. Speaking at the National Council on Industry, Trade and Investment meeting in Enugu, The Minister of Industry, Trade and Investment, Jumoke Oduwole, said that the priority is to turn investment commitment into production, export and employment while improving Nigeria's competitiveness under the African Continental Free Trade Area. She also added that Nigeria has already recorded $6.1 billion in non-oil exports, while the Bank of Industry has disbursed 636 billion naira to businesses, with efforts continuing to drive industrial growth and job creation. We head to the Red Chamber now. Yesterday, the Senate resolved to summon the Central Bank of Nigeria, the Nigerian National Petroleum Company Limited, and 39 other ministries, departments, and agencies over their failure to honor invitations to appear before its Committee on Finance, investigating revenue remittances and compliance with extant financial laws. The decision follows a motion by the chairman of the Senate Committee on Finance, Sani Musa, who in the plenary accused several revenue-generating agencies of frustrating legislative oversight by refusing to appear before the committee or submit requested financial records. We rely on sections 88 and 89 of the 1999 Constitution as amended. Mr. told the Senate that the committee was constitutionally empowered to investigate the finances and administration of public institutions, compel witnesses, and demand documents and examine evidence relating to management of public resources. Now, the Lagos Chamber of Commerce and Industry, they have shared their media observation on the state of the economy. The chairman, Mr. Leye Kukuli, notes that the evolving global economic environment presents both opportunities and risks, underscoring the need for flexible, agile, and forward-looking policies to preserve macroeconomic stability and strengthen long-term growth, while higher temporarily boost export earnings, government revenue, and external reserves. Prolonged disruptions, they say, could sustain inflation through higher energy, transportation, fertilizer, and import costs. He's asking the federal government to, among other things, be intentional in budget planning and implementation. There's a pop-up now. I'm not using the prompt.
The Chamber has observed that several projects captured in previous budgets remain either incomplete or unimplemented, highlighting the persistent challenge in project execution, monitoring, and value for money delivery. FCCI therefore call for a comprehensive reform in strengthening the budget preparation, implementation, monitoring, and evaluation. Government should establish a measurable key performance indicator (KPI) to strengthen project monitoring mechanism, improve transparency, accountability in public expenditure, and ensure that budgetary allocation translates into tangible improvement in infrastructure, public service, delivery, job creation, and overall welfare of Nigeria. Manufacturers, particularly the small and medium-sized enterprise, continue to face excessive regulatory burden arising from multiple registration requirements for products, with identical formulation but different packaging size. This duplication increases compliance focus, delay market entry, and constrain business expansion. We call on relevant regulatory agency to harmonize product registration requirements and adopt a risk-based approach that eliminates unnecessary duplication while maintaining product safety standards.
So there you have the recommendations from the Lagos Chamber of Commerce and Industry. Let's connect that to, we know that on Tuesday the NPC met and then they shared their decision. And how is that affecting commodities prices, or how can we expect that to affect is what we'll be discussing among other things. Now with the research manager at financial derivatives company, Ms. Jumobi Oluwole joins us virtually from London. Jumobi, good morning. Welcome to the program.
Good morning. Thank you for having me, Ini.
So it was a hold, and I don't think we saw reactions. It seems that hold position was already priced in even before the decision was made.
Yeah, you're very, very right in that. And I do believe I hinted, to that reaction or that market reaction on Tuesday. Most analysts expected that, the central bank will hold, looking at all of the fundamentals and factors driving inflation and global geopolitics developments that we're seeing, and the possibility of all of that leading to higher increases in, commodity prices, and more importantly, also the domestic dynamics that we've been seeing, especially with petrol prices, FX demand pressures, and more so food supply shocks.
But can we connect this to the money supply increase that we've noted from the CBN?
I will say not so much. Again, I know that there is the quick and easy way to somewhat link an increase in money supply to inflation, and how that the central bank would likely want to hedge against that sharp increase leading to a possible increase in inflation, just looking at the simple definition of what inflation is, which is too much money chasing too few goods. However, when you break down the money supply numbers, we see that quasi money and near money are the biggest drivers of that increase. And what exactly is quasi money and even near money? So those are easily non-cash assets that can be quickly converted to cash. So we're looking at treasury bills, we're looking at treasury certificates and things like that. So we're seeing that a bulk of the increase in money supply are in non-liquid, easily convertible, certificates or treasury bills that can be converted to cash, but are not exactly cash as well. And if you break it down further, you look at the cash in circulation, you see that cash in circulation is just roughly about 5.5 trillion, not so much as the quasi money that's over 88 trillion naira. So I will say that right now, the biggest driver of inflation is not money supply growth.
So normally we would connect money supply to inflation. Is that the case here?
Not necessarily, simply because we now know that inflation in Nigeria right now is primarily driven by supply side shocks, right? So we're seeing more of cost push inflation than demand pull inflation. So cash in circulation and how money supply relates to inflation is when people actually have the cash to purchase goods, right, that are scarce in the market. And that's not really the case in Nigeria as of today. People's living wage is highly capped. People are not spending as much as they would have loved to, and we're seeing prices rise significantly, not because people are demanding as much. For instance, we see peak periods like the festive season where you will see certainly an increase in demand rush that eventually translates to somewhat an increase, minimal increases in cash in circulation, and then we see an increase in prices. But right now, inflation in Nigeria is primarily driven by cost push factors, and I think I alluded very strongly to this on Tuesday. We were looking at factors such as insecurity driving food supply issues, and then of course increasing prices, and then you see the imported inflation bit of it, with petrol prices significantly rising and then also contributing to distribution costs, and then an increase in food prices, and certainly the movement in the naira that we have seen as well, impacting food prices. And the outlook really is that this trend would likely continue, especially as election spending picks up.
Yeah, we did have that conversation maybe on Friday. So I mean, we should expect price of commodities to continue to trend upwards?
Yes, unfortunately, so that's likely going to be the case, and especially when you consider the fact that food supply shocks are still very much imminent, from the flooding incidents to farmers' inability to produce and harvest as much, and the fact that we're even about to enter another planting season. The odds are not necessarily looking very bright in terms of domestic commodity price stability.
All right, baby, thank you so much for that. Well, unfortunately, but reality, planting season comes, and then with all of the disruptions, prices will tend to be upwards. Thank you, Dumebi Oluwole, Research Manager at Financial Derivatives Company.
Thank you for having me.
Let's take a break now. When we come back, we started an insurance conversation yesterday. We'll take it further today. Please stay with us. Welcome back. The federal government has launched an agricultural intervention program, and that is aimed at empowering smallholder farmers across the country. They're supposed to benefit from structured financing, quality farm inputs, extension services, weather advisories, and a guaranteed minimum price mechanism. The initiative, which is designed to improve productivity, reduce market risks, and strengthen agricultural value chains, is facilitated by the Bank of Agriculture in partnership with the Federal Ministry of Agriculture and Food Security. This is contained in a statement that was issued by the bank's team lead in charge of Corporate Communication Department, Ms. Ruth Didon. According to the statement, the launch is part of the Renewed Hope Smallholder Support and Value Chain Program, which was flagged off in Zaria, Kaduna State by the Minister of Agriculture and Food Security, Mr. Abubakar Kyari. The minister is stressing that the program reflects the federal government's determination to boost domestic food production by strengthening support for smallholder farmers who produce approximately 85% of Nigeria's food. The statement adds that the managing director of the bank, Mr. Ayo Shotiri, describes the program as a major shift in agricultural financing, noting that it places farmers at the center of a support system that extends beyond access to credit. And yes, continuing the insurance conversation we had yesterday, today we do have another congratulations to share with the 53rd President and Chairman of Council of the Chartered Institute of Nigeria, Chartered Insurance Institute of Nigeria. He's right here in the studio, Mr. Akinjide Rimolade. Mr. Rimolade, congratulations to you.
Thank you very much, Ine. Good morning and good morning, Nigerians.
Yesterday we spoke to your association, Nigerian Insurance, and we had to do a congratulation party there. Wow. So today is also yours. So, I mean, happy congratulations to you on this role as the 53rd President and Chairman of Council. But, I mean, it comes with a lot of work, obviously, because insurance is yet a growing sector in Nigeria. So I think I'll just ask what I asked yesterday. What do you bring on board? What's going to be different with you?
Okay, thank you very much, Ine, and good morning again, Nigerians. I think for the Chartered Insurance of Nigeria, there's already a roadmap in terms of the strategy document that we have within the institute. So it's just for me to be able to, extract which my three cardinal agendas they are based on, which is technology, enforcement of the compulsory insurance, and also building. So those are just the things that I plan to do with the rest of the team, all things being equal.
And you've led 4 different insurance companies before now, so obviously you come with a lot of experience. How or what lessons are you bringing from those companies that you have led?
Yeah, interesting. I mean, based on what you said, I think the first thing is how I was able to, in terms of commitment, to deepen commitments, amongst my people, and at the same time, in terms of the result that we generated over time, in those insurance companies, because I felt that, throughout the period I was in those insurance companies, if you show commitment in whatever you do, invariably it's going to help you to be able to generate, in terms of the results that the shareholders they are looking forward to. And then I think secondly too, it has to do with, being a trusted steward, because from time, I let people understand that whichever insurance companies that, you go through, if you're a trusted steward, you're able to create a legacy, and people are able to build on that legacy, going forward.
And penetration would be a huge one for you, because penetration percentage in Nigeria is really low, single digit.
Yeah, you're right, and I mean that's the reason why, in terms of what the regulatory body has been able to, achieve. That's in terms of the NERA 2025, which is the Nigerian Insurance Reforms Act 2025. I think it's going to be a game changer. I mean, we've started seeing the changes, in terms of how we can be able to upscale, the insurance business. And coupled with the fact that, in terms of all the various bodies too, that are within the insurance space, the likes of the Nigerian Insurance Association, the likes of the NCRB, which is the Council of Registered Insurance Brokers, the likes of Inland, which is the Institute of Loss Adjusters of Nigeria, and also in terms of the area. I believe that it's just for us to work together. If we work together and then continue to create that awareness, and like I said, with the NERA 2025 that spoke about in terms of the policy holders protection, definitely I think there will be an increase in what we're going to see going forward for the contribution of insurance.
And I bet more Nigerians would look the way of insurance if they are sure of the benefits, the payments of claims and all of that.
Yeah, you're right. I mean, I always say, why are you in business if you're an insurance company? I mean, it's just for you to be able to pay claims. And over time, I think, based on last year's data, insurance companies generated about 2.3 trillion in terms of premium income. And we paid out about 47% of that as claims.
People don't make noise about this.
Well, you're right, and that's one of the cardinal agenda that I have, which is technology. So how can I be able to use technology in terms of podcast? NI already has it. So invariably, how do we partner with the likes of NIA and also effectively bring our own podcast so that people that have experienced, in terms of claim settlement, they can start giving testimonials. Because when they give testimonials, when a market woman that has experienced loss, is able to say, oh yes, I actually paid for this insurance, I experienced the loss, and then so insurance companies, they're able to pay the claim. I mean, those are the things that I believe will showcase insurance in the right direction.
Well, we hope to see more of that, because even people who have been compelled, to buy the third-party policy, when they need it, a lot of people don't even remember that they have an insurance that they're supposed to use. I don't know if you know that. So I guess maybe by the time you sing more of the claims and the situations where these come out, then people would remember, and then more people would know, oh, we're not just doing this because we have been compelled to. Then they'll actually do that. But you wanted to react to that?
No. I mean, it's all about education. How do we continue to educate our people? Because the third party you spoke about, most people have it at the back of their mind. Oh, let me just have this third party in case.
So that any official is talking, I'll just show them and I
Correct. But CRI coming into the picture, we'll have ambassadors, or we have people that will take ownership in the various regions. Maybe Abuja, the south, the north, the western part. for them to be able to educate people. If you take up a motor insurance, third party, these are the things that are covered. These are the limits. So invariably, if another vehicle hits you, you can actually make a claim from the insurance company.
And you don't have to pay out of pocket.
Exactly.
There's no need to fight.
That's it. That's it. I will get to that stage.
Okay, all right. And you are promising online CIN exams worldwide. I mean, yeah, nationwide.
Yes. Part of the agenda, which is STEP, technology, focus on that. How do we, because it's something that has been in the pipeline. Now, how do we now execute it? How do we make this thing to be a reality? And we're looking at the first quarter of next year. Let's try with, maybe the objective aspect of the exam. How can people stay, in their various homes, comfort of their houses, or even they can come to the college where we have a, system that they can actually use to be able to do the exam, because Wi-Fi will be provided.
CIN exam is supposed to qualify for what?
Well, it is a professional examination, and when you go through all the stages, eventually you become an associate of the Insurance Institute of Nigeria, which is AIIN. And then, with that, in various organizations, either maybe in broking, in loss adjusting, in insurance, if you want to head in all those various sensitive positions, these are the qualifications that the employer will request.
So you want to make it easier for individuals to participate?
For them that is it. For us to be able to have more membership, because invariably when members see that they can do things, electronically, it will attract them, to be able to, become members and at the same time take up the exam.
And then, of course, you have NIRA. NIRA is already on. And I think that's a game changer for the insurance. I remember when it was just introduced, in the stock market, we saw a lot of investors going the way of insurance shares and all of that. And
Right.
It's deepening the adoption and implementation of this law that would also help the industry.
Yeah, as Ali said, fantastic. NIRA 2025, it's a game changer. Game changer in the sense that what has the law been able to put in place, first of all, in terms of the policy protection, the policy owners, they are protected based on the law, and at the same time, it has been able to set up a policy fund protection, which is 0.25% of the net premium of all insurance companies on an annual basis. These are the funds that they are kept aside, and then it's administered by independent bodies, so that in case if maybe social insurance company, they are not paying claims, with this fund, the claims can be settled. That's number one. Then number two, it has provided confidence in terms of the capitalization, which will end 31st of this month. So invariably, in terms of the life business, that has to be capitalized to the tune of 10 billion. In terms of the general business, capitalized to the tune of 15 billion, and also reinsurance, 35 billion. So with that capitalization, insurance company, they won't have an excuse not to pay claims. And then in terms of the compulsory insurances too, which we spoke about, the motor insurance, which is compulsory, the group life insurance, which is compulsory in the life business, those in the oil and gas sector. So if you are carrying, petroleum products, definitely you are meant to, do insurance, it's compulsory. Then the owner liability insurance, whereby, those that are, constructing buildings, definitely they are meant to have insurance, which is compulsory. And then even owners that they have tenants, in their respective homes. Now flood is happening. The question is, are you protected against those kind of risks? So those are the things that will, that really, NIRA has been able to, to provide.
And all of this, you hope to spread the word. I believe you call it Insure Nigeria Awareness Campaign.
Yeah, you're right. Over time, yes, we've been having the Insurance Week. And part of the things that we have within the Insurance Week is the Insurance Walk. During that walk, which insurance industry, comprising of the various bodies. They have to walk from NEM to National Stadium, and then they can, carry the flyers, just let people know that, oh, this is what insurance is all about. So in the course of that, yes, we create the awareness, and at the same time too, we try to let people, know what insurance is all about.
Now you also have the mentor-mentee program.
Right.
Tell us about that.
Yes, you see, we've seen over time that, some of our practitioners, those that have left the insurance industry, but they still have, that knowledge base. How do we transfer the knowledge base to the incoming generation? It's very important. So we're going to start the mentor.
But first of all, we have to make insurance attractive. Yeah. Right.
Mm-hmm. No, you're right. But at the same time, too, there are lots of younger generations that, they want to come into insurance, and they are fast thinkers. So with the mentor-mentee, with the experience that the mentor already has, it can assist, the mentee to start thinking of insurance in the right direction, so that we don't lose, that professionalism that we are talking about in the insurance industry.
Oh, we certainly do wish you the best as you come on board. Any parting words?
Yeah, I think the parting words for me, it's first of all, let me just thank in terms of all the past presidents, that have actually made the CIN to be something that one looks forward to, being the president of CIN, and at the same time to just encourage the younger generation that insurance, there is so much opportunities, and it's just for them to come into our fold, and together we'll build a solid insurance industry. Thank you very much, Ine.
All right, sir. Thank you so much for coming. The 53rd President and Chairman of Council of Chartered Insurance Institute of Nigeria, Mr. Akinjide Orimolade. Thank you and congratulations.
Thank you very much, Ine. Appreciate it.
So it's now time to go global.
All right, let's check out what's happening in the global economy now. We see the Royal African Society. They marked 125 years of advancing UK-Africa relations together with business leaders, policymakers, and investors at the London Stock Exchange. The milestone event underscored London's role as a gateway for African capital while highlighting new opportunities for trade, investment, and innovation between regions. Take a listen.
Absolutely honored to chair the Royal Africa Society at a time when it's celebrating 125 years of being in existence. But also more important is that some of the issues that we're dealing with today are issues that Mary Kingsley, who has always been a champion of Africa, was talking about in the late 1800s. And this organization was founded in her memory by people from Africa, from the UK, who understood what Africa meant to the rest of the world.
What it aspired to, from the aspirations of Mary Kingsley, the founder, was to be a platform to promote mutual respect, commerce, not aid. Cooperation and collaboration with Africa that understands that Africa has its culture, has its own way of governance, and that Africa can thrive on commerce, fair commerce with Britain.
I want us to focus on the future that we have to build. And I think there's a platform here for us to talk about the key challenges we have and to agree apart on how we can intentionally build a future for Africans to have dignity and prosperity. We have to change the way our economies are structured. And we need to do that by intentionally planning for prosperity.
This time around is a focus on seeking
primary development in Africa, using global capital towards doing that, merging the ideas regarding technology, cooperation, and effectively changing our ethos from one of growth to one of development in the continent. And it resonates with us, and we're very keen to continue to develop the ideas that are being discussed here.
All right, let's get the latest from the UK now with our London Bureau Chief, Juliana Olayinka. And first, Juliana, good morning. We have data out there, and we see UK inflation. That's for June. That's about 2.6% from previous, that's for May, 2.8%. How's this data? How's it been taken over there?
Good morning, Laddie Williams. Look, this is great news in terms of timing, right? It was just a couple of days ago that Andy Burnham walked into number 10 Downing Street declaring that he wanted an economic reset. And of course, he can't take credit for this ONS CPI headline data, but it's good. It's good momentum showing that inflation had fallen to sort of 2.7%, which is the lowest it's been since March 2025, which is quite a while, actually, considering what's happened geopolitically since then. I think the fall has been attributed mostly to transport. I think we've been seeing lower prices at the fuel stations, particularly when it comes to diesel. I think for households, the most important attribution has got to be the fall in food inflation. Food inflation, I believe, fell to about 1.7%, and that's significant, particularly at a time during summer. We know the children at home. I know you know that, Laddie. Children constantly eating. So I think having and seeing that fall in grocery prices is really important. I'm not sure this is going to be enough to move the Bank of England during the next NPC meeting. The Bank of England have a benchmark rate of 2%. Of course, 2.7% is still quite high above that, but we are getting there. Interest rates currently stand at about 3.75% in the UK. We don't think these figures are going to suggest that the BOE MPC are going to cut, but nevertheless, really great optics for the new Prime Minister, Andy Burnham.
Right, I guess we can call June the month of easing, when it comes to inflation there. But on the policy front, we see Burnham is actually looking at slashing business rates on pubs and clubs by about 20%. I guess that's good.
Yeah, that's another great story. I think since lockdown, really, pubs and bars and the owners have been complaining significantly about their stress and their worries. I think, there's a lot of consumer habits changing in the UK. A lot of younger people, they don't necessarily go to pubs and bars anymore. They're very health conscious. Most of them would prefer to have a sort of matcha latte, than a pint. And so what we've been seeing over the past few years in this country is that there's been significant pub closures. And I don't think the Labour Party have been able to get it right. And so, this is great news. Andy Burnham has said that he is going to be slashing business rates for them by April next year by 20%, which is pretty significant. I believe the Treasury said this is going to cost them about £100 million a year. And it's going to hopefully extend the life of about 32,000 pubs. So, thumbs up all round for the Prime Minister this week. But as you know, Laddie, we're still very much in the honeymoon period. So, we're going to have to just be steady as she goes.
All right, I guess, the pubs, I guess they made a lot of money during the World Cup, even though England didn't get to bring it home. At this point. Thank you so much, Juliana.
Thank you, Laddie.
All right, now let's flip over now to see what's happening in other parts, and it's all about earnings. This is on big tech earnings, and we see Alphabet there. They have their Q2 earnings revenue there, actual $119.8 billion, beating the estimates of about $117 billion. Cloud revenue, $24.8 billion. That also beats estimates. Operational income, $40.8 billion. But CapEx, that's the one that got markets riled there. And also the CapEx projection, that's for AI spend, going forward, is going to be higher at this point. And that's why we see the stock did fall yesterday. Let's get a check on other earnings now. Let's look at Tesla. For Tesla, earnings per share, that was about 33 cents. Expected was 51. So that was underperformance right there for earnings per share for Tesla, second quarter of 2026. But for revenue, we had a beat there, $28.24 billion. Expected was about $25.71 billion. So a good one for Tesla. Let's look at BNP Paribas now. That's one of the top banks there in Europe. Net income, 4.35 billion euros for the second quarter. It was a fantastic result all through. Revenue, 14.10 billion euros. Net income growth, that was about 33% higher. Revenue growth, 12% higher. And operating expenses, that was higher by 10% year on year. All right, let's get to other stories now. Right there, let's see what else is happening. We see for South Korea's economy, that expanded faster than expected in the second quarter, powered by a boom in artificial intelligence driven by semiconductor exports. The stronger than forecast growth has reinforced expectations of further interest rate hikes from the Bank of Korea, even as policymakers keep a close watch on slowing domestic demand. Then Hyundai Motors, they reported a weaker second quarter earning there, with operating profit falling 21% as softer vehicle sales, production disruptions, and rising raw material costs weighed on earnings. Despite the miss, the South Korean automaker is maintaining its full-year outlook, banking on new model launches and higher production in the second half to drive recovery. That's what's hot in the global economy. It's back to Ini.
Thank you so much, Ladi. And heading to the markets now, we see a good recovery in the market. 0.52% is what we see, driven by who? First Holdco. First Holdco is still on the lip of a lot of investors. So we see it's gained about 10% this morning already. But Ladi will give you latest numbers intraday. That will be during Business Incorporated at 1:30. I'm Ini John Mekwa, and I'm wishing you the very best of the rest of the day.